The views expressed in this video presentation are my opinions and not necessarily the opinions of guests and others sharing or reposting this video. The content is produced only for educational and informational purposes. Do not regard any statements in this video as a recommendation to buy or sell any financial instrument. Investing comes with risk to loss of principal. Always conduct your own research and seek guidance from a professional investment advisor. I am not a professional investment advisor. I'm Dollar Will. And we're going to have a little news and a little stock talk. Give me a second. Little news, little stock. Little news, little stock. Okay. And there we go. Getting it together here. Concerns about hate speech and the promotion of racism on social media has prompted a campaign called Stop Hate for Profit. The purpose of the campaign was to encourage advertisers to ban ads on Facebook, Twitter, and Instagram. The campaign has been pretty successful. It's got a growing list of big budget advertisers like Unilever. The video I discussed or posted just before this discussed Unilever, so we know what they do. And I want to give you a little bit more background on this story and get some numbers going. See how big Unilever is. And again, this is Facebook, Twitter, and Instagram. We haven't heard anything about this particular, well, I haven't heard that this particular network was named, but pay attention. These kinds of fires have a tendency to spread. Okay. Consumer goods giant Unilever said Friday that it would halt all ad spending on Facebook, Instagram, and Twitter through the end of the year, as first reported by the Wall Street Journal. Unilever owns dozens of popular household brands like Hellmann's Mayonnaise and Dove Soap. And Hellmann's Mayonnaise. There's a joke in there, I won't do it. And Dove Soap, and typically spends more than $1 billion each year promoting them through various ad channels. You know, I could tell the same joke about Dove Soap, okay? They are kind of iconic and emblematic of a certain, I'll just leave that on. But considering that, what comes to your mind when you think of Hellmann's and Dove and the socially conscious position that Unilever is taking right now? It lets you know, it's encouraging, and it tells you that change is upon us. Okay. As of press time, Facebook stock had fallen more than 7% in the wake of the news. As a technical trader, you know I don't necessarily think that one caused the other. I think that's a correlation and not cause and effect, but it doesn't matter if that's what people think. It could still have negative impact on the company. You know, perception is reality. We invest billions of dollars each year to keep our community safe and continuously work with outside experts to review and update our policies, a Facebook spokesman told NBC News. We know we have more work to do and will continue to work with civil rights groups, GARM, and others, and other experts to develop even more tools, technology, and policies to continue this fight. Twitter Vice President of Global Client Solutions, Sarah Personette, responded to Unilever's decision, saying, "We have developed policies and platform capabilities designed to protect and serve the public conversation, and as always, are committed to amplifying voices from underrepresented communities and marginalized groups. Wait a minute, is that Black folks? Okay, we are, does that include, not limited to, does that include Black folk? It should, it must apparently be true. We are respectful of our partners' decisions and will continue to work and communicate closely with them during this time. Last week, organizations like the NAACP, the Anti-Defamation League, Color of Change, and Free Press, I'm sorry, my mind was processing that the Anti-Defamation League is rallying against Mark Zuckerberg. And Free Press launched a campaign to stop hate for profit, urging advertisers to pull their spending on Facebook through the month of July as protests against police brutality and racism crop up across the country. Since then, over 90 companies have halted spending on the platform, including Patagonia, Ben & Jerry's, and Verizon. Unilever said it would maintain its planned advertising investment by shifting its spending to other media. The complexities of the current cultural landscape have placed a renewed responsibility on brands to learn, respond, and act to drive a trusted and safe digital ecosystem, Unilever said in a statement to The Verge, continuing to advertise on the society, ongoing, and will revisit our current position if necessary. The Stop Hate for Profit campaign launched following discussions organizations had with Facebook over its policies surrounding hate speech and misinformation. The groups took out a full-page ad in the Los Angeles Times last Wednesday, urging advertisers to participate in the boycott. Today, we are asking all businesses to stand in solidarity with our most deeply held American values of freedom, equality, and justice, and not advertise on Facebook services in July, the ad said. Let's send Facebook a powerful message. Your profits will never be worth promoting hate, bigotry, racism, anti-Semitism, and violence. Boy, he must have failed. He being Mark Zuckerberg. He did not, apparently did not perform well at that meeting. Wow. Yeah, Facebook is really in need of a real good public relations person that can rein him in. And again, this article is from The Verge, and the link is below the video. I have a couple other things I want to run through, and those links are also below the video. This particular one is from the BBC. I'm going to jump down to this section. It says, why are companies boycotting Facebook? We know why, but there were a couple of small little things, information that were in here. The Stop Hate for Profit campaign was started by U.S. civil rights groups. This is one. After the death of George Floyd in May while in police custody, it has focused on Facebook, which also owns Instagram and WhatsApp, and last year attracted advertising revenue of almost $70 billion. Wow, that's a lot of money. I didn't know Facebook was getting that kind of money. Wow, that's huge. The organizers, which include Color of Change and the NAACP. All right. I just had to pause there. I'm just like, good to see the National Association for the Advancement of Colored People doing something. You put your name out there a little bit more forward. NAACP has said Facebook allows racist, violent, and verifiably false content to run rampant on its platform. Color of Change President Rashad Robinson said the steps announced by Mr. Zuckerberg showed a failure to wrestle with the harms Facebook has caused on our democracy and civil rights. If this is the response he's giving to major advertisers withdrawing millions of dollars from the company, we can't trust his leadership, he wrote on Twitter. Let me just pause right here and remind everybody Facebook is a publicly traded company, which means you can be fired. Okay? Steve Jobs can be fired from Apple. Mark Zuckerberg can be fired from Facebook. Okay, more than that. And this last sentence from Unilever is one of the largest advertisers in America. Okay. And the statement coming out of this group, Color of Change, is if this is the response he's given to major advertisers withdrawing millions of dollars from the company, we can't trust his leadership. I would like to remind you that Facebook is, again, a publicly traded company. The purpose of that company by law is to make money for the stockholders, and Facebook makes money by selling ads. And the source of their money, their reason for existing is to make profit, and they are not courting their dollars. They're not taking care of their customer base. They really serve the advertisers, okay? What we do on these social media platforms is incidental, to the main thing, which is selling eyeballs and ears. That's what it's about. So stay tuned to this one. But, all right. More than 90 companies, including Verizon and Patagonia, have joined the campaign, according to a list by ad activism group Sleeping Giants, one of the organizers. I guess you would go to Sleeping Giants to get more current information about who's on that list. But if that list keeps growing, Mr. Zuckerberg could be taking an extended vacation. Nicole Perrin, analyst at eMarketer, said it will be difficult to determine the financial impact of the boycott on Facebook, given the significant changes in advertising amid the pandemic. But she said Unilever's announcement was significant, noting that the firm was dropping the ads for longer than called for and on more platforms. Again, the initial call was for advertisers to boycott through the end of July. Unilever said they're going to boycott for the rest of the year. So, change is upon us. All right. Also, I'm just going to put this below. Y'all can read. This is about the North Face in Patagonia. Joining in as well. Let's see. And then just in other related goings on is Google and Facebook again are cracking down on the far right. So far right, it's got Facebook and got Facebook in hot water. Facebook's going after the far right, and Google is likely saying, "Wait a minute. If Facebook is on the list, if Facebook is under attack right now, we naturally would be next. Let's go on the offense." So you can read this about the attack on the far right. So if you are a CEO of a Google or Facebook, you have to show yourself being responsible and protecting the shareholders. And the job of the CEO is to help the shareholders make money. So turning off advertisers is not, that's a dereliction of duty. Okay, so it's going to be interesting. And also, in the 18th, Facebook removed some ads with the symbol used by Nazis that you're president, the leader, the face of American democracy and freedom and pluralism. Okay. He was apparently using a Nazi symbol. So we will leave that right there if you want to read those other articles and listen to them. They're below the video. Okay, on to some of the stocks that I was talking about. Let's start with Facebook. I'm not going to go real deep into the technicals, but just to make the point that these leaders called the FANG stocks, which is Facebook, Apple, Amazon, Netflix, Google, look a little stressed. So we got a weekly chart right here. And I'm just connecting the lows. You can see it definitely broke out of this long sideways pattern. So you're talking about 4 weeks it went sideways, then it broke the trend line resistance from where it started rising. And the moment, and this is a view of it on a daily chart. And the size of the candlestick itself is important. And so this is from today. This is now, the full trading day. And you see there's pretty significant volume bar from today. So if you look back in time, this is for all of 2020, you don't see a volume bar this vigorous. Okay, so this is not a show of optimism. I'm looking back further in time. You have to go back to January 2019 to see a volume day that matches today. And so 1 is a big volume day, 2 is a down day, 3 is a Friday. Okay, so when people are afraid of losing money, meaning, let me say it another way, when people are fearful that they're going to miss out on a big gain, meaning lose money because the market's going to open up higher on Monday, they don't leave the market. So an optimistic market, people stay in the market on Friday because of fear of missing out of the market opening higher on Monday. So instead of fearing that the market would open higher on Monday, this is a sign of the market fearing that the price will open lower on Monday. Now, the fundamental investors camp will tie this to the ad band, but as a technical trader, I look at it and say, well, it was already overbought. It was due for a correction. It's got it had a full expression of the wave count. For explanation of this technical stuff I'm saying, join my Patreon. It's the best $10 a month you can buy. You will never find get this much of attention and specific guidance for so little. So, all right, let's see. So that's Facebook. Let's go look at Apple. Apple is the largest stock by market cap in America. So the good news is it's still trading within the channel. It has the momentum is headed down. We're looking at a daily chart, and we did have a big nasty candlestick for today. It's not as bad as others, but we'll have more next week. Better idea next week if this thing is going to break it. But I'm in the camp that it will. This thing is ready. It's ready to go. Now, how far will it come down? That's my opinion is it's going to take this out. But that's I can't really say that there's anything here that's showing that at this moment. We'll just have to watch the depth of this decline to get a read on it as it happens. But they can't keep propping this market up, So at some point, we're going to have to get into a real downtrend where we make lower lows. This is the decline from February, and these lows held. So that was a good move. As bad as this decline was structurally, with respect to the strength of the uptrend, because these lows held, meaning we didn't go lower than these lows here. That was a strong, a positive. Let's put it that way for Apple, and the people were rewarded. Now, is that going to happen here? Well, it's overdue already. Okay, to have a significant decline. I mean, very, very significant. We're talking, I mean, this is what Apple looks like, okay? So this is a monthly chart. So we're way up here. I mean, so this thing is due for a real significant decline, okay? Something very major, you know. I mean, you can kind of see this is all kind of one channel. So I say for my technical traders out there, to my count, this is a wave 3. I don't see anything here that I could really say. I believe there's a wave 4 coming, which would be pretty significant. Now, what would be worse than that would be, I mean, if this is a 5 count, and the correction after that would really be hell. So that's the most optimistic call, that this all represents a wave, three waves of the 3 out of 5. The wave 3 of 5, put it that way. And wave 4 is a negative move. But the good news is, if this is a wave 4, it's bad. If this move here represents a wave 3 and the next move is a wave 4, the good news is there's a wave 5 which would go higher. But wave 4 will hurt like hell. That's the, you know, gotta get the bitter with the sweet, you know. Okay, let's see. Let me take a look at. All right, that's the monthly. Let me take a look at the weekly. All right, we got a inverted hammer. A little bit. I guess you would technically that would be a shooting star, but it's not really shooting that much. But it's definitely way over bought, and it is rolling over. So Apple is not very encouraging right now. And this is the daily chart, and we made lower lows. So that's Apple. So the next is Amazon. Big Nasty again. Good news. Amazon is inside the channel, but the momentum is still headed down. It has moved significantly above that February decline. This was the February decline. This is the longer view. It's overdue as well. And it is a retailer. People don't have money. They're waiting on stimulus checks. That's what the fundamental camp would argue. This doesn't look good either. But let's see if it holds, if it stays in the channel. It could. Even if it goes much higher, comes down and continues higher, it doesn't have much more to go. You know, there will be better trades, in my view, than sticking with these high flyers on the NASDAQ. There are easier ways to make money coming. The thing about it, when you get caught in a downtrend, something like this, that's like, we're talking like $2,000, you know. Or look at the look up here, the high and the low. The close is what it is. Okay. $2,700, okay, $2,700, okay, basically. That's a huge fall. Something that big, you know, the bigger they are, the harder they fall. This will be a pretty nasty correction, you know. But like I said, hey, it's trading inside the channel, so that's the good news. But this is one you would definitely want to watch every couple of days, because it doesn't have a big drop as bad as Facebook, but it could catch up. It definitely could catch up. And if companies since companies are not making the money that they have, in the past because of sales. It's got to show up for the number one retailer. You know, I mean, where are people getting the money? Let's see. Netflix. Now, of course, people are sitting at home, and Netflix is one of these companies that I'm sure they're making lots of money, likely more money. But when it's time to leave a sector, money just leaves. It doesn't even matter if a company is making money, okay? People will leave a sector just because they've made a lot of money. That would be a reason. And they find easier places to make money. And this is what Netflix looks like on the monthly. Now I can see it maybe running a little more, just not much, but I can see it. I can see a few more pennies in this, But we were in the nosebleed. We're definitely in the nosebleed. Yeah, it didn't break above. Come on, it didn't break above this level until not too long ago, anyway. So we kind of still dancing around that level right in here since April 20th. So that's 2.5 months. Just kind of been dancing around this prior resistance. It could, I can see it. It could maybe get another leg higher, but again, you're talking about a stock that's like 450, and it's been running a good while. I can find or think of much easier ways to make money. From this view, it looks like it may hold, like it may get here and hold. But how much is in the tank? That's the question. I look at these stocks and I think, what would you rather do? Would you rather fall off the roof or fall off the porch? I could find some beaten down stocks and industries that's just turning around where the decline would be like falling off the porch. This these Facebook, Amazon, Apple, Netflix stocks, the fangs, when they roll over, it's going to be like falling off the roof. And the last one, Google. Let's go with this one here, Google L, which is the A shares, the voting shares, the one with the big money. And big money's in that. So we had a high here in February, had a nasty bottom, a V. This is like a V recovery that they talk about. But it didn't make a higher high, and it's trading outside the channel. Just broke it. And this is a daily chart. Big volume spike. Not as bad as this one, but that's a pretty big, nasty, ugly candlestick. That's pretty serious. And it took out this low. So we're back to the prices from May 19th. So we took out about a month, a little more than a month, since the 24th. So yeah, this is a good example. Again, the prices fall much faster than they rise. Today is the 26th. Wednesday was the 24th. So Google made a high this past Wednesday, and by the close of the day today, it had taken out a month, about 5 weeks a gain. So in 2 days, it lost 5 weeks a gain. It took 5 weeks to get all the way here. It took from Wednesdays, Thursday, I say 3 days of trading. All day Wednesday, all day Thursday, and all day today. It took 3 days to eliminate profit that took 5 weeks to create. That's why you really got to know technical analysis. Now, just imagine your retirement account when you don't look at that every week. You don't look at it every month. You look at it, if you're lucky, at best, you probably look at it when the statement comes in. You might look at it once every 3 months. So let me run this by you again. 3 trading days took away 5 weeks of gain. What do you think a month would do if not paying attention? Okay. And then even if you are paying attention, not knowing what you're looking at or how to interpret it, So get some training, if not from me, from someone. Get some technical analysis training from someone. All right. So that's Google, and what I found. There is an ETF, exchange traded fund. It's a basket of stocks. That's what an exchange traded fund is. There is an ETF. Look at this, FNGSZ. They're all the same thing. This whole part that says micro sectors FANG, that's what we're looking at. I didn't put the last number in because I wanted you to see it. These are all slightly different. That's Facebook. I guess that would be, like I said, Facebook, Apple, Netflix, Google. And this one is long. It goes up when it goes down. I mean, it goes up when this ETF goes up when those stocks go up. This one goes down double the amount that those go down. So this one wouldn't be making money right now. And this one goes up 3 times as much as those go up. And this one goes down 3 times as much as those go down. And so this one will be making money now. And this one goes up twice as much as they go up. Now, all these leveraged ETFs, I'm just showing you this for information purposes. I do not, in my opinion, I would be telling my, people closest to me that, hey, you need to leave this alone if you don't know how to trade. I refer to these as like Vegas plays, okay? Couch money, but just to make the point that somebody is always making money. So this is the triple inverse one. So it goes up 3 times the amount when Facebook, Apple, Netflix, Google rises. But when you're wrong and those things rise as they did, you get destroyed. Okay? So this is not any joke here. Nothing to play with. All right. Now you see here, we moved it out the way, got the volume information in the way. So this is a daily chart, and this is what it did since the 23rd. That would be Tuesday. So the low on Tuesday is 226, and the high for today is 272. Okay, it's not a whole lot, but it's getting there. It's getting there. So 26 to 72, that's 50 cents. That's 20%. That's not bad. It's 20%. And since Tuesday, not bad. Now, the point is, 2 points. One, somebody's making money always, okay? So there's always a way to make some money. The second point is, if you know technical analysis, know how to read a chart, then you can mitigate some of the risk with getting into these like real crazy leveraged plays, because these are not designed for you to just put your money in it and just leave it there. This is a trade. You put it in for a short period, and you watch it every day. Okay, and you know about stop losses and things like that, and so you know how the strategies to use to mitigate your risk. Okay, but this is the immediate payoff that comes from learning technical analysis. So when things are falling, there are ways you can profit. So just to make that point. And I think that's all I got. This weekend, I'm going to talk about the S&P 500 and the Dow and the NASDAQ, the bigger indexes that have greater impact directly on your retirement account. I'm gonna, look at that so we can see what the damage was on that. So I don't know if I'm gonna be doing that. I do not know if I'm going to be doing that Saturday or Sunday, but one day this weekend. So till then, peace.